How's it going, everybody? Hope everybody's doing good. Hope everybody had a good weekend. Pretty volatile week behind us. Definitely much more volatile week ahead of us. Of course, we had about a 74, 76 point expected week last week. Looking at it quite a bit higher here. It's about 106 to 114 point expected move on the week ahead. So with CPI on Tuesday, some earnings, and a few other events moving along, we're certain to see at least some decent size move and contraction and expansion within the market. So we'll take a look at that, and especially later tonight we'll have a more in-depth look at the week ahead. This is just going to be a quick weekend recap on last week and what we saw and what we're kind of looking for tomorrow. So last week markets were quite mixed, finishing a losing week that saw the rally to start 2023 stalled, due in part to worries about inflation and the Fed's efforts to slow it down. On Friday, the Dow and S&P 500 were in the green while the NASDAQ declined. And then for the week here, the NASDAQ did sink about 2.4%. S&P 500 dropped about 1.1%. And then the Dow lost just about 2.2%. And we can see here's on the daily. Got the Dow on top, the S&P in the middle, and then the NASDAQ down below here. So not too bad as far as the S&Ps go, and the Dow was definitely helped with some post earnings moves in there that kind of helped keep it up there a bit. So continuing to look back at the trading week, our key areas we identified, of course, were this 4211 gravity point here, and you can actually see we had the alert here. So this alert was sent out on January 30th. You can see there it's post dated at 8:30 in the morning, talking about the turn point was going to be that 4211. And why is that? Well, that is the next major upside gravity point that also had to be a major confluence within this bull flag, within the core downtrend line. All of those things kind of lined up to set up, if you will, the perfect storm there. So that is something that we wanted to take a look at as we move forward, and we'll talk more about that later this week as well. So moving on here, so that was the magic turn point, as we called it, right, as a major hurdle of resistance, and then a critical support around was the 4060, 4070 range. These made up nearly our exact range of the week as the high and the low. We kicked off the week with a nice trendy rally, just tagging about 2.5 handles shy here. I believe the high was 4208.5, so that 4211 magic point there, so just shy of that gravity point, where we quickly found sellers, as you can see here. They came in pretty strong. It wasn't as quick as we thought, and this looks a little bit steeper on here, but you can see it kind of stalled out into here, and then it picked up as we started to bounce and then sold. We continued to sell back off into the beginning of last week. So these made up that range, and then when we found those sellers, then into Thursday, our sell side target was looking for the 4090.85. We alerted to that reaction there, and this zone, we were saying that it would be more than likely would be telling for what the next week, this week, would look like. The market certainly agreed with the importance of this level, as we spent nearly the entire day chopping in that zone before a late day pop. And it's no coincidence either, as it was another clean example of a textbook technical analysis 101, where it was this resistance area we lifted off from after the FOMC previous Wednesday, rallying 200 plus points. And then what happens to resistances that break out with force? They turn into key supports, of course. Not only this, but the approximately the 4085 is also support of that core one piece week, this bull flag here. I'll back out a little bit so we can see it a little bit better. There, you can see that a little bit tighter there on the 4 hour. Back down to that 1 hour though. But yeah, we can see that there, that structure, that bull flag structure that we have been discussing daily, and was a driving force for all of our trading last week. Friday, it held where we saw markets. We did get a little, we saw markets sell down to that 4070 into the day, and then saw a nice profit taking squeeze to close the week. That popped up, cooling off directly under the 4100, right at 4099.5 handle. I mean, that just can't get any cleaner than that. We essentially spent the entire day right where we closed Thursday at, which is roughly supported the bull flag, like I was saying, and has everyone's eyes on it. So this occurred after a quick overnight morning wash to 4065, like we were saying, which we had alerted to as an area of great interest. where we look to bid this back up direct. This means that objectively we are still within the flag structure and it has not failed. Therefore, probability has to be that this flag can continue to fill out. We closed right under that 4106 key resistance Friday, and it would not surprise us at all to see more chop and basing overnight here and into the Monday session tomorrow before the CPI on Tuesday. And as we stand right here, a few things are clear. We spent last week consolidating inside of this perfect bull flag structure, and this consolidation is verified on the weekly chart with ES putting in an inside week, and we can look at that here right on this weekly. You can see this right here. We'll zoom in a little bit. See how clean that is on that weekly. That really does validate what we are watching on this this bull flag structure here. So that's not something we want to take too lightly at all. But we've got to keep in mind what the other side of that could be. But it's definitely something that we have to allow the chart to show us, and we have to allow our bias to stand to the side, right? We can't just think what we think it should be doing, because that obviously is not how this works, So obviously, with a big move is coming in, it put in an inside week. Inside weeks lead to breakouts, and a big move is coming. CPI Tuesday very likely drives this, especially with that expanded expected move like I just brought up at the very top of this. Also of note here, though, is that it will be quite important that bulls hold 40.85.80. The absolute lowest about 40.65, which keeps something like a push to the 41.28. 41.35, somewhere in there with that gravity point, a nice dip, which we've been getting so far here. Futures have opened, and then maybe a push back up 41.60, keep that in play. Shorts come into play no matter what. We feel they have to be on the table if they come in below 40.65. So right now, as it stands, big picture, while we have been day trading a good amount of the action lately, as that has been what is working best, it is also important to point out that the level below which a broader bull case would be jeopardized. This is fairly clear now, and it's shown by we have a blue box here back below there, which I'll have on the updated chart here when I post it here tonight. But that is on there around 39.75, 39.90. There's a confluence there, which is the one is the core rising channel from October 22's lows, and then there's the back test of the core falling channel from the January 22 high. So that does need to fail before there is any notable change to the trend. Let's take a look at a few other things that we saw on Friday here. Where are those at? And then let's grab those. I made a little watch list. There we go. That'll make it easy there. So we're starting at the bottom. We'll go from the bottom up as we read through these from Friday, okay? So the big winners in Friday's session were fossil fuel providers. They had most of the top spots among the best performing S&P 500 stocks as oil prices jumped over 2% following Russia's announcement that it would reduce output. However, the leading gainer of the index was Dexcom, which is this DXCM. So these are all our XOP, oil and gas, XLE energy, USO, oil, UGA, gasoline. You can see these all did quite well on the change here on Friday. But the leading mover in the sector was this DXCM that it was actually up about 9.93 there. But with shares soaring well over 10% after the maker of the diabetes testing devices exceeded profit and sales estimates. Another one of those was strong revenue guidance lifted of one of the financial tech names here, which is Global Payments. That's GPN right here. Motorola is MSI. Shares rose after the telecom equipment maker beat earnings and revenue forecasts and posted a better than expected profit outlook. Next on the gainers list here is going to be Lyft. They did lose more than a third of their value as the ride-sharing service reported a surprise fourth quarter loss and predicted weaker than expected current quarter revenue. The nasty winter storm that caused massive travel cancellations in December, if you guys remember, that hurt a lot of profit at booking sites like Expedia, which is EXPE here. They were down about 8.55. I mean, you can see that Lyft was down 36%. And then Lyft getting hit by a few different things. But that big storm there in December definitely was to be hurting profit there. The 8-day winning streak for Tesla had ended as shares dropped about 5% after the CFRA analyst Garrett Nelson reduced his rating from strong to buy. they were very, very overbought, and this was a pretty easy trade to step in there. Now, we didn't take too much on that. We just wanted to catch a little piece of that, and that's what we did. And we'll talk more about this tonight and tomorrow on the individual names. Now, take a look at Disney here. Shares of Disney slid about 2%, falling for a second straight day after they had initially advanced on the entertainment, the earnings, and the reorganization plan. And that's going to get pretty interesting. We'll talk more about that this week as that starts to get more news on that. I think that is an interesting goings on, if you will, on a giant name like Disney. Next up here is CRM, which is Salesforce. Shares led losses down in the Dow, reversing course from the Thursday's jump when it was learned that activist investor Dan Loeb took a pretty decent sized stake in the cloud software company. Obviously, it was, buy the rumor, sell the news type of idea. So we're just kind of going to keep an eye on that. Next up here is TNX. And remember, that is the 10-year treasury yield. Jeez. So the note did move higher. Above there, we have gold. Gold futures fell. It was interesting, though, with silver didn't fall quite as hard. They were actually kind of decoupling a little bit there, but they kind of evened out later as we went on here. Of course, our arch enemy here, the dollar, climbed against the euro and the pound, but it did lose ground to the yen, and that's something we'll be watching here overnight in the Asia session. And then prices, we got Bitcoin and Ethereum here at the top, and they're actually popping a little bit here on the futures open. But last week, most of the major cryptocurrencies did decline, with Bitcoin trading below 22,000 for the first time in 3 weeks. And the other thing we need to keep a close eye on is Ethereum. If it gets back below the 1,400 handle, that could get very, very interesting for the rest of the market as we move forward. One last thing we'll take a look here before I let you guys go on this recap video is going to be the University of Michigan consumer sentiment here. U.S. consumers were more upbeat about the economy this month, despite believing that inflation will rise more than previously thought, according to the survey done by the University of Michigan. The preliminary February index, which is the MCSI, was up about 2.3% from previous month to month, which is 66.4. It's the highest it's been since January 2022. And what we know about 2022, that's where our trend line started from the swing highs. Ironic? I think not. The measure of current economic conditions was 72.6, a gain of about 6.1%, and the best level in 14 months, actually. The index of consumer expectations declined 0.6, falling to about 62.3. Joanne Shu, she's the Survey of Consumers Director. She also noted that sentiment has now risen for 3 consecutive months and is 6% above where it was just last year. But, however, it's still about 14% below 2 years ago, prior to the start of the current inflationary cycle that we've obviously been in. And she did explain that higher prices continue to weigh on consumer attitudes, which we've all felt the actual direct effect of that, I know. Inflation outlook is somewhat up right now. Shu said that the median outlook for annual inflation a year from now moved up to 4.2% from 3.9 in January. It had fallen the previous 3 months since it was kind of going down in October, but we've seen it keep continuing to fall down. The median estimate for the next 5 years held steady at 2.9%. She did add that because of inflation and concerns about the possibility of rising unemployment, consumers are poised to exercise greater caution with their spending in months ahead, quote. So that is an interesting take. And when we get into CPI on Tuesday, I will be bringing this back up again. That's why I'm bringing it up now. So when I talk again about it on Tuesday, it will all start to make a little bit more sense, and everybody will understand why I am talking about that. So futures are open right now. I'm going to go ahead and leave you guys alone for now. I'll come back with another video later tonight. That will be the outlook, what we're looking at for overnight and tomorrow and the rest of the week. Obviously, quite a big of expansion of expected move. We have the CPI on Tuesday. So we're definitely going to take all of this with a grain of sand as best we can. But we'll continue to watch here. Asia opens up into the Europe Open, and we will get that outlook video up probably within the next hour or two. And then we'll go from there. Guys, have a good night. And of course, as always, cheers and take it easy. I will talk to you all very, very soon.